Welcome back to the Daily Journal. So let's review my trade from the 2 a.m. Po3 on NASDAQ this Tuesday morning. So starting on the daily charts, you can see we had taken out this previous month low. We had then had a change in state of delivery, which is telling me that price has retraced into this previous month low and then had a change in the state of delivery from sell side delivery to buy side delivery. So I'm looking at this as a market maker model. And I'm looking for price to then trade to these external highs. That's my general high time frame bias on the daily. Whether that plays out or not is besides the point. For the time being, I know that price has had this change state of delivery here, right? So it had expanded. It then had a retracement into this daily fair value gap. And it's left behind this external range liquidity over here. So when I drop down to the 4-hour chart, which is the chart that I'm looking for my main bias. So you can see how this was the price when the price had traded into that daily fair value gap. Now when I'm coming into the session today, what I've noticed is that price had inverted this 4-hour gap. You can see price had traded into that. What I was also looking at was price having traded into this volume imbalance. So you can see if I put the inversion here, now this is the candle that we traded. So you can see that we had these relative highs. We also had these highs over here. So when I drop down to the 15-minute charts, and let's just rewind the clock here to so you can see how Asia had come down, tapped into that inversion, and then from 2 a.m. price had traded up into this liquidity, but none of those were swing highs. And then at the London Open at 3 a.m., you can see we manipulated lower. Now we had taken out Asia's low. We had then taken out this sell side liquidity, which is pre-market essentially. You can even call this Asia. So after taking that out, I'm looking for a change in state delivery to confirm that price is going to reverse and deliver to these highs. So this was my low-hanging fruit, which is these relative highs from the Asian session. And so what I'm looking at right now is that since price has traded into this inversion, as well as that volume imbalance, I'm looking for a market maker model to deliver from that volume imbalance to the buy side liquidity. Since we had taken out all the sell side liquidity, you can see here, here, as well as here. This change in state delivery on the 50-minute chart is telling me that price has shifted from accumulation to distribution. So what I looked for was a close above this. Now that wasn't a close, my alerts hadn't gone off. And when I looked at the charts, we were already up here. Now ideally, if this had closed above, I would have dropped down to the 1 minute and looked for continuation models to trade this continuation. But that was not the case. And in fact, what I was looking for was to trade this continuation. So the trade was, ideally, had we closed above that, I would have looked to get in, right? Of course, price would have had to have a different playout. Even if we had closed above that, I would have had to wait for the wick to be formed, which it never really did. Well, it didn't, in fact. So even if this did close above, and this price action is what followed, this would still be the same trade. So looking for price to trade into the fair value gap, and then close above the sequence of candles that delivered into that fair value gap. And once I got that, that is where I entered the trade. My stop loss went to that low, and this wasn't too high. However, when I look at the standard deviation from this move, I was aiming for that 2R. So I took off the majority of my trade at these Asia highs, right? Because for me, this was the market maker model. Right, that's the low-hanging fruit. That's the lowest time frame market maker model. And having taken out Asia's high, you would have already taken out 2 previous candles highs. So also when I use the 15 minutes standard deviation to project price higher, this also landed up in my 2 to 2.5 standard deviation zone. You can see when we let price play out here, we took out that. Now once we had done that, my stop went to break even. And I let this play out, even though ES had taken out, right, ES had already taken that out by that point, before it had taken out my take profit zone. But I left it running because I was looking for price to have a retracement on the 15 minutes, which we got. So I left my runner, and my stop loss was at break even. And this was just a continuation model on the 15 minutes. You can see price had traded into that fair value gap. We had the change in state delivery here. We made relative equal highs over here, and then we continued to head towards that standard deviation target, which it eventually got to over here. And you can see there's the executions. So when we go back to the 15-minute chart, you can see how this market maker model had played out. And in fact, you can take it up to this original consolidation, and you can see how the standard deviation from this projection actually landed up with that drawn liquidity, which is, I believe, the previous day high. And the rest is history, right? We had taken out that level. And so I'm looking for continuation for the next session. We'll have to see if price is going to consolidate going into New York, or if we're going to get a continuation and then perhaps a New York reversal. We'll have to see. But nonetheless, really, really nice trade. Great way to start December. And yeah, these are the top trades that I look for. Right? It's 50-minute sweep of liquidity or a 50-minute fair value gap. In this instance, we got the sweep and nice change of state of delivery for a continuation model. See you guys in the next one. Please like and subscribe, and we'll see you then. Cheers.